Intraday Trading Market Technicals morning call video for Monday, November the 11th. Green across the board. Dow Jones up 167, Nasdaq up 61, S&P up 23.5, and the Russell up 20. This was in fact due to we had a stronger non-farm payroll report. Now, everybody would say, well, stronger. If that's the case, doesn't that mean that tapering is going to come sooner than later? That is correct, but it doesn't matter what we think. It's how the market reacts to what the numbers are. And this is what I'm saying. For months and probably years, we've been adverse to what good numbers are bad for the equity markets. And sure enough, somebody on Friday, decided to say, hey, you know what? These are great numbers. We're going to go and rally the markets. Now, the thing that I did kind of digest was that the number itself, the unemployment, I think ticked up. The unemployment itself, I think, was at 7.3% or something like that. Was a little worse than expected, so it went up a little bit. So, I'm thinking maybe that might be the reason why they rally the market higher. We took back about 2/3 of the previous candle on Thursday, which I'll show that to you in the chart segment. But here's just a 5-minute chart. And here, this is basically what happened. And this is the continuous contract of the minis. This is the overnight session. This is Thursday, selling off. And then Friday morning, we didn't really do much of anything. And then we dipped way lower to the 1736, taking out that key pivotal 1747. But we rallied right back up and then rallied into new highs, and into the close we rallied. So crazy market, guys, and this is why I say you have to have your stops in place, and you would not want to be married to one particular side. The market is in fact heavily manipulated by the Fed, and whatever the markets think, it's going to happen. So it's not what I think, and it's not what you think. It's what the market does, is really how we need to navigate through these markets. So I just wanted to show you that 5-minute chart. So if everybody was short Thursday, they ended up covering on Friday. Now, the markets are still way overbought. We are at lofty levels. It is not a sell signal, but we need to be cautious still, because what happened on Thursday, we can easily here see this happen again. Now, we did take back 2/3 of the candle on Thursday, so do the markets follow through? Now, we're up about 175 in the pre-market, which is pretty amazing stuff, that the markets are at these levels, and we really can't get a sell signal. Now, we could have this chop going into the new year, and then maybe have a late Santa Claus rally, or we could literally just start to sell off from here. That's why we really don't know. And this, remember I said on Friday morning, news does trump the chart. So you have to really see, is this really for real? Do we start making another leg up? Well, we don't know. We don't know until the next day or two what really starts to see what happens here. Remember, you have to put in the back of your mind that the Fed will start to taper. Now, the banks did extremely well because interest rates are on the rise, and they are going to affect their bottom line, which is going to be great. They're going to be making more money. So the banks are doing well, which is a good sign if the markets do, in fact, continue their move higher. Tech is a little soft, but we'll go through that in the chart segment. Now, I want to show you some of the indicators that we follow, and it's always good to kind of keep an eye on what's going on. Here is the new highs and new lows. Well, we rallied on Friday, not to new highs, but pretty close. And look what's continuing to happen. New highs, we're actually going lower. We're down 60 points. Okay, that again to me tells me that the indexes are the only thing that's rallying, and really quite so. When you go looking for certain stocks, unless it has an earnings or a downgrade, most of the stocks are just either they gap up or down, and then they just kind of stay sideways. A big mess out there on the individual stocks. But if you look at the new highs and lows, again, this is going lower, not up. We should have been turning up here. So again, big red flag for me anyway. Stocks above the 50-day moving average here. We did get a move up. We're still on a sell signal at these lofty levels. This is, in fact, a sell signal to me. So this is still intact. Again, we have the NASI Weekly. NASI Weekly is on a buy signal. New York Stock Exchange Summation Index, apologize. That is on a buy signal looking to curl down here. So this is something also that's interesting me. Now, the NASI, which is I want to show you, that is on a sell signal. That did not turn up. So tech rather weak. New York Stock Exchange holding its own, but actually succumbing to some selling pressure on the summation index. So we have a little bit of mixed signals, but again, overall, a lot of the indicators are still pointing lower. Okay, new highs, new lows. I showed you. Let's take a look at the dollar. Now, the dollar had a huge rally based on again an earlier taper than later. That's what they're assuming now. Remember, things do change. So the dollar's breaking out of this consolidation area here. Broke out, consolidated his little spot, now breaking out again. Now it's going to need to take out that 81.79. Remember, if the dollar starts to break higher, you're going to have commodities start to break down. Well, before we get into commodities, I just want to show you. This is the bullish percent SPX. This is still on a sell signal, even though we did challenge the high here. So remember, another area where to me I would be using extreme caution in this market, because at any given time you need one little thing, one little button to hit or something to come out, a catalyst to sell this market, and this market will be sold rather quickly. There's a lot of longs being bought up at these areas, so if we don't break out, we break out and fail, and we start taking these pivotal lows at a 1747, markets will start to roll over much faster than the market's rallying. All right, so just keep that in mind. All right, back to the dollar, and as you can see here, we are breaking out of these areas, so we got to use caution here, because if you are trading commodities, it does affect the commodity. Right now, it's inversely correlated. You can see gold actually breaking down here, and again, I like gold to the downside. I've always liked it. I've never gotten a great entry. I missed this entry here, and I've missed this entry here. So now we did break bearish symmetry, but we're starting to roll again. So if gold can get back up to at least a 50-day and make that high or low from here, then I would take a good objective short here, easy to manage. But if we do break down here, then the next target's going to be these lows over here, and I'll still take a short here. But right now, you're kind of in no man's land, although it is trending lower. So watch gold for lower prices. WTI, we did get a big sell-off here. So I'm looking for more, again, I don't like shorting crude because of geopolitical risk. Anything can happen overnight. I'm always a better buyer of crude than I am. But again, crude oil has gotten destroyed, as you can see. So we are consolidating here. This is what I like to see within a big, large base. Nice big supply area here. We have a lot of interest in this area. You can see the volume zones are much higher here than they are in any other areas. So here, if you wanted to, for a trade, you can take this at this high. Take this high out. I think it was on Wednesday. If Wednesday could take this high out, and we can get above this 8 EMA, then your stops would be below this cluster area or this little wick. It's depending on your trading plan, but I would take this as a long trade. So I'm watching it. Crude oil is down about 16 cents, but again, watch it that it could break the 8, and then if we can take out this high, then I think you'd have at least a shot to the 20-day moving average, if not the 200. Remember, it's a counter trend trade. If you're not used to counter trend trading, I would back away for this for now until the market can break bearish symmetry. Okay, so there's crude. Let's take a look at the metals. Here's silver. You can see what a crazy chart. I don't trade silver, but I do like to look at it. As you can see here, a lot of the metals are weaker because we have a stronger dollar. Here's silver. Now, palladium, a little different. Palladium is breaking out. Here's our quiet leader, right? This is the guy that we want to look at here. This is what takes the market higher and lower as far as our precious metal sector. Now, it did break out of the symmetrical triangle. Now it's consolidating. If it starts to break out, this does break out first, and the other ones kind of lag a little bit. We'll see what happens here. But with a stronger dollar, I'm not sure if this is going to get much of a rally over here. Maybe this might just be it, and we start to break down. So this is what I'm going to be looking for in the coming days. And you can see gold, I mentioned, showed you again how weak the gold is. Now copper is has been weak, and did okay on Friday because that was a risk-on type thing, and copper rallied. But a lot of overhead resistance, 8, the 5, the 20, the 50, and then, of course, the 200 with this slanted upper trend line of the symmetrical triangle. So copper really not doing much, which tells me that we're going to have weaker metals ahead. Okay, here's the VIX. VIX lower again, took back the candle from Thursday. But again, guys, watch the VIX, because when the VIX starts to explode, that's going to give you that confirmation sell signal. So if the markets rally today, maybe the VIX comes down right down to that area, to that 20-day, that 1220, 1250 area, and then if that holds, then I think for an objective trade, you can get long volatility here. Okay, so let's take a look at the chart segment here. All right, so we have our 1272 extension, which we met. Now we're sitting right above it. We're still above the 8 EMA. We're up 2.25 again, so looks like risk on in the pre-market in the early morning session. 1774.50 is our new high in the E-mini December contract, Christmas contract. So we take out this. The next area is going to be 1781. 1780 to 1781. That's the 161.8% retracement. Guys, I'd be very, very cautious here, especially if we make this area. I don't just see us going all the way up to 1800, which would be the next target. So 1781 and then 1800 would be your next target. But I would be really, really use a little bit of caution here, because this to me, as you can see, from October 9th, literally rallying, a couple down days, one really serious down day, and then we're starting to break back up again. So just use caution. We can really change that tone in a matter of minutes. Okay. Here's the USO. Again, if you're trading crude oil, you could trade the USO. I'd like to see us take out 34.36. If we could take that out on a closing basis, then easy to manage. Your stops would be below this cluster here, 33.68, or below here, or even if you wanted to get it down at 33.33, just below that area. So pick your spot where you want to manage your risk. But again, let us get above the 8 EMA here. This is a good gauge of momentum. As you can see, momentum is to the downside. We are moving lower. Bearish symmetry. We broke that neckline, and actually target's been met on the headline, on the head and shoulders pattern. So the first spot's going to be the 20 and the 50, which is coming across here. The 50-day, the 20 and the 200. I apologize. 50 days way up in here. So that's going to be your first target if we get WTI and crude oil to manage to run up at these areas. Okay, here's gold, GLD, as you can see here, kind of no man's land. That's why I'm not really looking to trade it. I want to get it back up into these areas of resistance before I look to short it. Otherwise, you could short this on the break low. But again, your risk, as you can see, is much more greater shorting here than it is shorting back up in these areas. So no trade in the GLD. Monthly spiders, you can see, hold on very well. We do have this uptrend channel. Again, within a bearish rising wedge, only bearish if we break this lower trend line right up in here. So right now we're still holding well, and again, continuing to climb up, guys. This is a pretty unprecedented price action in the markets, that's for sure. Spiders weekly up, still we're above the bearish rising wedge, holding above the upper trend line of this bearish rising wedge. And again, we have this channel here, as you can see, this area here. That would be your next target, would be 180, which would be about 1780 in the S&P and the minis. Okay, Spider's daily chart took back 2/3 of it, if not almost all of it. Now we're above this area here, and we are holding true to this March 2012 low. So we need to really start to break back above. Now, if we take out 177.48, then we can easily see higher prices again, guys. So that's why I said it's not out of the cards. When in doubt, believe me, this market is crazy. I don't put anything back behind it. As you can see here, we're still rolling over. So really, it's going to be a do-or-die situation today, tomorrow for the markets, if we're going to go higher or if we're going to start to break down again. Here's the IWMs. Did very well again. Moving up, risk on. We took out most of that candle high. And next area is going to be take out of the 20. Now remember, the IWMs, the Russell, where money was coming out of the Russell and going into these other safe haven sectors. So let's see what happens in the next coming days if the Russell can regain some momentum to the upside. That would definitely hold well for continued prices higher, actually. Diamond, same thing. Took back that candle, as you can see. So, no question about it, that was risk on. Here's the transports, not as strong as the other indexes, but again, our leader, we need to pay attention to what it does. We need to really take out this area. But again, your next target is going to be 130.21, if in fact that we do have a risk on appetite again. So again, today, tomorrow is going to be very interesting to see if this market can hold that reversal from Friday. Okay, XLF, again, take a look at the banks. Now, this is going to help the bullish case, no question about it. Remember, we had this bearish symmetry, lower lows and lower highs. Thursday, we actually puked just about, made it almost to the 50-day moving average, and we literally clearly reversed. And now we have two of our leaders in the bank sector which would be J.P. Morgan, which have done nothing, and basically because of the lawsuit the last month and a half, big explosive candle to the upside. Now, this is what you want to see, and this is what you want to pay attention to. Okay, the regional banks exploded to the upside as well. So you definitely have an appetite for banks because we did get a little bit of selling coming in the last 6 to 8 weeks. And now, if J.P. Morgan can break out and take out the highs here and stay above this trend line, then I think you got a shot to the highs up here of $57. So I'll be watching J.P. Morgan for a long trade. Goldman, I always liked Goldman here. I still like it. It's been kind of a quiet mover, but we did explode to the upside. Now, Goldman, if it could take out this high, 164, you're going to have a 170 target easy on Goldman Sachs. Again, higher prices bodes well for the banks. Remember that. Okay. Apple, we did get a move up, but really not much here. Kind of quiet. So we'll just see what happens with Apple. We continue to move higher. IGN, which is the networking sector, again, risk on, so obviously going to have a big move up. Let's see if we can hold this slanted neckline. Again, if that does happen, your target's going to be $27 here. Okay, and lastly is the Qs. As you can see, took back about 2/3 of the candle. Same thing. Pattern recognition. You see the patterns remain the same. Markets were up, stayed up all day, pretty much into the close. We're still in overbought territory, so we still need to unwind this overbought reading to really, to me, to get moving to the upside a little bit more. So let's see what happens. Definitely a good reversal on Friday. Let's see if the bulls can capitalize on this reversal. To me, remember, anything can happen. A perfect example on Friday, guys. Use your stops. Don't get married to one side. Don't get married to one position. Let the markets tell you what to do and just follow suit. Okay? Buy strong stocks, sell weak stocks. And remember, the markets are made to fool the masses. Have a great day. We'll speak to you tomorrow. Take care.